Hey guys, it's Mrs. Lamphere, and we are looking at Unit 5 in accounting. So this is going to cover the payroll system and how we pay our employees. We've seen that account called salary expense before in our transactions, and this is kind of how all that comes into play now. So when it comes to the payroll system, every organization relies on its employees to smoothly operate the business and therefore expect pay in return. So salaries are paid according to guidelines issued by the government which protect interests of the employees. When we're calculating and maintaining these payroll accounts, this is one of the big aspects of any accountant's job. There's usually even like specific accountants, payroll accountants that attend only to these payroll accounts if it's a really large company. To calculate the salary for each employee, accountants have to follow an accounting process. While calculating salaries, accountants also calculate deductions. So we're going to go over the deductions that come out of a paycheck as well. So in the United States, the Federal Insurance Contributions Act, or FICA, requires companies to withhold certain portions of employees' earnings in order to contribute to Social Security and Medicare. So when you have a job and you have a paycheck, you'll notice that there are certain deductions made. Some go to maybe your federal income tax, state income tax, and then also to FICA, which covers Social Security and Medicare. And so the employee has to contribute to these two accounts, and the employer has to also contribute to these two accounts. If you want to know more about these accounts, take your personal finance class, and we discuss these accounts very thoroughly in that class. So employees can also request to withhold additional amounts to cover insurance and other benefits. So there are required deductions like Social Security and Medicare, and then you can also request to withhold additional amounts to cover, maybe you want a portion to go to your insurance every month or a portion go to a retirement account. That can be set up by each individual employee. So in this unit, we're going to learn then how to record those journal entries once we've kind of set up these payroll accounts. And we're also going to look at gross salary versus net salary and talk about the difference in those. So again, we're going to learn about deductions, taxes, and the forms then. W-2, W-4, you maybe have heard of those forms before, but those are all related to payroll taxes. So let's get started in section 2. And in this first video, we're going to cover gross earnings. So we're going to look at kind of the purpose of having these payroll accounts and then also calculating gross earnings. Then we'll cover deductions in the payroll register in the next video. So let's skip ahead to page 4. Payroll accounting terms and records. So these are all the terms that you should get familiar with that are associated to payroll accounting. First of all, payroll it's the list of employees and payments due to each employee for a specific pay period. So there's going to be a sheet of paper that lists all your employees and maybe the hours they worked, the amount they make per hour, or if they're salary workers or overtime workers. All that information will be included on your payroll. The pay period then is the specified period of time that this employee is being paid. So maybe you're paying your employees weekly or bi-weekly or monthly. That will be shown on the pay period. Payroll expense is the largest expense account for most companies. So one of the biggest expenses for almost all companies is paying their employees. So we have that payroll expense or salary expense account. Again, this is usually set up weekly, bi-weekly, or monthly, depending on your pay period. The paycheck then is the paper document that is issued to the employee for the amount that they're owed for their salary. The pay stub, or also called the pay slip, is the document that shows the employee received their check along with the receipt of the direct deposit. So we'll talk about direct deposit as well throughout this course, this unit. Then we have a payroll card. It's a card that allows an employee to access their paycheck by using a card that looks like a debit card. So some businesses can set this up where maybe they deposit your check into an account automatically, and then or it's put directly on this card. Then you can just use this card to buy things or withdraw cash. It's kind of like a debit card, as you can see here. So I have never really seen this done. Maybe in like really large companies they do this, but I'm thinking maybe this is kind of something that's done not as much as it used to be. Objectives of a payroll system. So why do we have one? The main objective of a payroll system is to collect and process information needed to prepare and issue payroll checks. So the payroll system, a part of the payroll system is to see who we have working, again, what they're getting paid, if they're salary workers, overtime workers, all that information is collected in this payroll system. And then it is also to generate payroll records for accounting and reporting purposes to all stakeholders. So we collect this information in order to get accurate information to issue our checks, and we also collect this information to show our stakeholders. So those people that have maybe an investment into our company and own portions of our company, they are going to want to see what's going on too, and who's getting paid and how much they're getting paid and so on and so forth. So to have that information available to them as well. So large organizations, we mentioned this before, they often hire a payroll clerk whose responsibilities include verifying the employees that are paid on time, ensuring that each employee is paid the correct amount, finishing payroll records, submitting payroll reports, and preparing and paying payroll taxes. So these next couple of assignments, if they interest you at all, you might want to look into becoming a payroll clerk, because this would kind of be then your main focus for that company. All right, let's talk about gross pay. So when we're talking about gross pay, this is the total amount of money an employee earns in a pay period. Okay, that is considered gross pay. This is also sometimes referred to as salary expense. The term gross means the amount calculated before deductions. So we talked about those mandatory deductions that come out like Social Security and Medicare, and then also kind of option deductions like insurance and retirement, whatever. So those are the deductions we're talking about. So the money that you earn before those deductions is called your gross pay. Okay, so for full-time employees, when they work within a semi-monthly pay period, their pay rate is 1/2 the actual month gross pay. So each pay period, if you're paid every 2 weeks or semi-monthly, then you're paid half of your monthly gross pay each of those weeks, each of those 2 weeks. So it's just divided in half. That's kind of a lengthy definition for something very simple. Then the time worked for gross pay computations includes paid leaves and holidays. So if they have like paid vacation or paid holidays, that would be included into that gross pay. So gross pay computations for full-time employees can change when they work less than a full pay period or they leave without pay. So there could be some things that go into, maybe they took some days off and did not have paid vacation hours, or they had sick days that weren't paid. Then we'll have to make those calculations to compute their gross pay. So we're looking at ratio of time worked in days or hours to the scheduled time available for work in days or hours. And in cases of promotion or demotion during a pay period, 2 calculations are done, 1 for each salary level. We'll kind of look more closely at this when we go through our examples. And in addition to basic salary, gross pay includes pay for other compensatory services that are available to employees on designated pay dates. So this could be like overtime, assignment pay, callback, standby, compensatory time. So basically, any additional payments that we need to recognize in the payroll falls under this category, the compensatory services. Oh my gosh, that's a tricky word. Compensatory services. Okay, so we'll kind of go over that stuff too in our examples. All right, so these are the different categories of pay. Someone might be paid a salary, and salary is the fixed amount of payment for a time period. So, for example, Renee is paid a salary of $3,000 a month. Her gross earnings are $3,000 for each month. She may work 160 hours one month and 170 hours the next month, but she will still get that same amount of money. So when you're paid by salary, it's a fixed sum of money that you will earn, no matter how many hours you work. Okay, that's how salary works. Hourly wage workers are paid then by the hour. So they have a certain rate that they work. So maybe they get paid $9 an hour. You take that times however many hours they worked during that pay period, and that equals their gross pay. So for instance, in this example, this person worked 25 hours. So you take that times their hourly rate to determine their gross pay. we'll get to overtime pay here down at the bottom. Commission then is an amount paid to an employee based on the percentage of the employee's sales. So if this is an employee in like a sales division, maybe they earn 5% for each dollar that they sell. So last week his total sales were $8,254. Therefore his gross earnings for the week are $412. So taking that total sales times 5% here in this calculation shows you what his gross earnings then are for that pay period. That's commission. Okay, then there are some setups that might earn you salary plus commission. So maybe you have a base pay for salary, and then you're also granted a commission. So for instance, Mr. Dion works at a shop. He's paid a salary, so he gets $200 per week plus 3% on all of his sales. So he earns this $200 a week plus 3% of this $4,810. That would be his gross earnings. They calculate it out for you, $344. So it's that $200 plus the 3% of his sales. Piece rate would be you're paid so much depending on the number of units you produce for your job. So for instance, Mr. William, his pay mode is a piece rate system, and the pay rate is $10 per unit. So if he produced 25 units in a week, his salary is, or his pay wage is $250 then for that week. And finally, overtime pay. So when someone works, maybe they're paid hourly and they work more than 40 hours a week. So 40 hours is considered full-time, and then anything over 40 hours would be considered overtime. And an overtime rate is usually 1.5 times the regular hourly pay rate as determined by the Fair Labor Standard Act. Okay, so this is kind of a law that's in place, is that you're paid 1.5 times the hourly rate for every hour that you work overtime. So for example, Philip works in a trading company. He worked 46 hours. His hourly pay rate is $10. His overtime wage is $15 an hour. His gross earnings then would be calculated, so you calculate his regular pay, so 40 hours times $10 an hour would be $400. And then he works 6 hours overtime, so we take that times the 1.5 pay rate, which is $15, which would give him $90. We add that together, and his weekly gross earnings would be $490. We're going to go over those more during our assignments, and I think, that's all I want to include in this first video. The next video we'll talk more about deductions.